I've got a few burning questions to ask you. Tell me a bit about like what makes self-employed more complex than a simple PAYG.
There's a lot of documentation needed. You got to keep up to scratch with your BAS lodgements, your tax returns, all that sort of jazz, right? And a lot of people that become self-employed, they tend to fall behind on that, and they don't generally lodge on time. I mean, you do get a lot of people that do, but we run into a lot of instances where people don't. And when that happens, mate, we rely on other avenues to establish serviceability. So banks, the mainstream lenders will normally ask for 2 years tax returns. They'll look at your net profit and loss over the last 2 years. They could average the two or take the latter of the two, depending on the bank's policy. And they normally assess that for income. Right now, I'll give you a scenario. We've now just tipped over the financial year for 25, right? A company's not really obligated to lodge their tax returns until I think early to mid next year, right?
Yeah.
So if somebody comes to us now and the bank wants to assess serviceability and they haven't lodged their 25s, they're giving us 23s and 24s. Yeah. The 23s and 24s may not accurately reflect what their current profit is, right? Now, if they haven't lodged their 25s, then how do we establish that income? If somebody's come to us with a contract right now and they want to lock in a property, the last thing they want to do is be handing their accountant to get their lodgements in on time when they're too busy, right? So what is alt-doc? Alt-doc is, or low-doc is an alternate way to verifying income for self-employed.
Okay.
Rather than collecting the last 2 years tax returns, we could look at either A, the last 6 months of business banking statements, which will look at the performance over the last 6 months. Or B, we look at the business activity statements for the last 6 months. Again, we're isolating the performance over the last 6 months rather than last year. Or C, we just get an accountant declaration. We get a letter from the accountant confirming that, hey, this is their current profit, and off we go. That could be well beyond what they lodged in the last financial year, right?
True.
Hence why I was saying the last financial year may not accurately reflect what they're currently earning. As such, we look at alternate ways to verify income. And that's perfect for our self-employed guys who need funding.
These criteria, are they more common for like big banks or is it more strictly like third tier lenders that will accept that? Yeah.
Well, it's a good question, right? So almost all the mainstream banks will not look at that option. They don't do low doc. They all require 2 years of lodged tax returns, ATO notice of assessments, right? So look, the average person might be familiar with 5 or 6 banks these days. You're talking NAB, ANZ, CBA, St. George, Westpac, and a few of the smaller guys like Bankwest, Suncorp, ING and whatnot. We've got over 40 lenders on our panel. We've got lenders that you've never heard of that exist that operate just in this space, right? The likes of Liberty, Latrobe, or Red Z, Resimac. We've got all these lenders that...
Some names sound familiar there.
Well, yeah, the average Aussie may not have heard of any of these banks. They exist they're specifically in place to handle these second tier inquiries where the main banks may not have an appetite for that.
Okay.
We go to these guys. They're a bit more open, they're a bit more easygoing, they may let go a bit. Sure, they may charge a premium, that does come at a cost, but sometimes, mate, if you want to get into that property and lock in finance, it's got to be done.
What's that premium looking at? Is it more like interest rate or is it like a establishment fee?
One or both, or two or both, a combination of both, depending on the lender, right? So some lenders might charge anywhere from, or some low doc lenders don't charge a risk fee. They call it a risk fee. So
that's a separate fee on top.
Yeah, correct.
A risk fee. Wow.
It's a risk fee, right? And I'm glad you asked that question. The reason they label it a risk fee is the lender is taking on additional risk by not assessing the last 2 years' financials. When isolating the last 6 months' performance or just an accountant letter, that does come with an elevated risk. As such, as with anything, the higher the risk, the higher the price. They could charge a risk fee. Now, some would waive that, others could charge anywhere up to a 1.25% risk fee, which is charged on settlement. It's taken out as part of the proceeds. That's the first avenue. Second avenue is a lot of these lenders will charge an additional interest rate. So it could be anywhere from 0.5 up to about 1.5% per annum on top of what you'd normally pay with your main guys. That's another additional cost. And a lot of them don't offer the sort of features that the mainstream guys offer. So they may not offer offset accounts, they may not offer transaction accounts, they don't offer credit cards or the traditional facilities that the main banks could offer. So it's a bit of a trade-off, right? I tell my guys, if you want this, mate, without wrapping up your tax returns and paying your taxes, you got to compromise somewhere, and that's where we sort of sell these products. But having said that, mate, they're normally not there for that long. We normally see them there for 1 to maybe 3 years before we refinance them out. And on a good note,
So it's kind of like a temporary option before they go to like a, like a big bank. Is that how it kind of works?
Absolutely. Look, we'd like to think that it's temporary. We don't want to see our clients stay there too long. But again, it's up to their financial position. They need to get up to scratch with their financials and lodgements, and we would be happy to exit them the second they become eligible. But we can never guarantee an exit. So that's the thing, right? We've also got some excellent products out there available right now on the market where they're rewarding borrowers who pay their loans on time, right? So what we're doing now is with a lot of our low doc clients, when we settle them and they sit there for 12 months, if they have 12 months of impeccable repayment conduct and they pass a few simple criteria, we can refinance them to a mainstream interest rate, not a mainstream bank, but we've got lenders who are offering mainstream rates right now on par with the majors without a financial assessment. So they won't ask for any income tax, they won't ask for any income documents, no tax returns. And they'll give them a rate pretty close to the majors. All they look for is 12 months of repayment conduct being excellent. So if someone settles on a low doc loan and they're paying too much, we will always try to get them out after 12 months.
Got it. Okay, so when you mentioned that's a product, is that a product that's specifically for you guys, or how does that work? Like, does another broker offer that same product, or how does that?
It depends. Look, right now we've got one funder in the country that's offering this. That's who we can access. Now, can other brokers access them? I can't say for sure. Not every broker has every lender on their panel, and that's another thing that could differentiate us from other brokers.
Tell me more about that.
Well, and I like that question, right? So we operate through, we have our own direct credit license. So we've got an ACL direct with ASIC. Not every broker does that. In fact, the majority of brokers operate as credit representatives under an aggregator.
That word popped up a few times recently, aggregator. So you guys are different because you don't operate under aggregator.
We still do. We still do.
Okay.
So almost all brokers need an aggregator. It's the bridge to access all the main banks.
Yes.
But the difference is that not every broker is a credit rep off that aggregator, a credit representative under ASIC. So every aggregator.
What does that mean?
So every aggregator has their own direct Australian credit license. They get it through ASIC. It's a very long, daunting application process. And then the brokers would then get registered as credit representatives under that aggregator.
Okay.
Now what that means is they can only access the products that aggregator offers, the lenders who are on that panel. Not every aggregator has every lender on their panel. We found that as a bit of a roadblock dealing with a lot of self-employed clients, and we wanted to offer them more options. So what we did was we went out to ASIC and got our own direct credit license, which is quite hard to do. It took us 8 months. Not many brokers do them, but then eventually we got them. We struck up a deal with our aggregator where we got to have our own ACL, but still operate through them. And that now gives us the ability to target lenders who are not on our aggregators panel.
Wow.
So the first thing I did was I targeted those low doc lenders that are not there to give cheaper products to our clients. And we also just got accredited with a new funder that offers that easy refinance product, that streamlined product. And now, Matt, we are selling them out the door. A lot of our clients have been sitting for 2, 3, 4 years on an expensive low doc product.
You can help them now.
To give you an idea on the savings, when you're paying a low doc interest rate of around 6.5% on $1 million home loan, I then move you over to around 5.5%. That's a 1% saving on $1 million bucks. That's 10 grand a year.
Oof, that sounds good.
10 grand a year. We're talking $800 per month in savings to your pocket. And this is available to borrowers who have illustrated a good repayment history. We're rewarding them. We're helping them break out of mortgage prison. Have you heard that term before, mortgage prison? It was all over the news a few years back. So we're offering that, and we love it, mate. We love it. I love rewarding borrowers who pay their debts on time and maintain their commitments, and that's what we're here to do.
Amazing.
That's what we're here to do. And this is why it's important to engage a broker. The general public are not aware of these options. They just don't know. You walk into your local bank, they sell you what they know. They're not going to tell you, hey, you can refinance that to a cheaper lender after 12 months. That's what the broker's job is. That's what we're here to do.
Okay. Yeah, because that's interesting, because a lot of people do ask, like, hey, why do I need to go to a broker? If they're just going to give me a loan with CBA, why don't I just go straight to CBA? Like, is there any... What do you think? What do you have to say about that?
That's a good question. So look, I'm an ex-banker.
Yes.
I worked at NAB 13 odd years ago in the residential commercial space. Loved working there. That's where I learnt my game, right? But I was presented with a lot of challenges and a lot of scenarios where deals were presented to me and I just couldn't do it. Why? I was limited by bank policy, right? I then went out into broker land, and all of a sudden, mate, we've got literally thousands of products out there, and then all of a sudden you've got deals that you couldn't do with the bank that you can all of a sudden now do elsewhere. So to answer your question, if you can get a loan direct from your local bank and you can walk in and get it smooth sailing with a nice, good, clean interest rate, happy days, you can do that. There's nothing stopping you. But how does that applicant know that there wasn't a better deal available elsewhere? How do they know that's the best deal suited to them? So why should you use a broker? As brokers, we don't just assess your ability to get the loan, we assess your suitability for a certain loan. We look at the full situation, we look at your assets, your liabilities, your financial position, your income structure, and we look at your medium to long-term goals and where you want to be in the medium to long term. So sometimes certain lenders may give you the finance, but they may not offer you the ability to reach your goals down the track, and that's where we plan accordingly. For example, you could walk into ANZ, for example, and go to settle on a land purchase, right? And your objective is to build on that.
Yeah.
But then you may not be eligible for the construction funding through ANZ due to a policy or a hurdle that they may offer. A broker will identify that early on and say, hey, rather than settle and refinance later, let's target a lender now that can get you that deal right now, right? You may be restricted. Same with turnaround times. I mean, you might want to deal with the Commonwealth Bank, but the Commonwealth Bank might have a long queue. If you need urgency, the broker will know what the service level agreements are with every single bank. So it's really important to emphasize here that we don't sell on interest rate. Interest rate is the first, well, interest rate's important, don't get me wrong, but it's not the first thing you should look at. You should be looking at the structure of the loan and whether it suits your interests and suits your long-term goals, and have a broker place the deal with the right lender who's going to give you those in addition to the interest rate. It's not just interest rate we look at, right? There's a lot of other features. If you want a fixed rate product, if the customer wants to fix his home loan, but wants to also offset their loan at the same time, then almost all lenders will not offer you an offset feature with a fixed rate loan. A broker may be able to offer that to you. For example, ANZ's 1 year fix will still offer you an offset. Adelaide Bank, Bendigo and Adelaide Bank will offer you offset across all their fixed rate products. Your local major bank lender will not tell the borrower about these features. That's why it's important to work with a broker. Also, being a solicitor, I'm sure you hit a lot of hurdles when it comes to settlement, right? Having banks settle on time and upload the funds to PEXA and ensure that they meet the settlement. When you're dealing with a broker, we're like the glue. We liaise with accountants, with solicitors, with real estate agents, with banks. We're like the middleman. I like to call myself the boxing bag. I'm there getting hit by all parties, right? We're like the glue that tries to connect them all. So working with a broker ensures that we're there. We're in your corner. We help the customer. We make sure we
all
hold.
brokers like that, or just you guys?
Oh, look, I'd like to think that all brokers should be like that. Whether they all are, I'm not going to comment on that. I can tell you that we hold ourselves to a very high standard, and I'd like to sell ourselves on not just interest rate, on service. And also we like to touch base with. So another important thing that brokers should be offering is regular reviews on your loan. So once you settle your home loan, you might be getting the best deal today. But how do you know you're still getting the best deal 6, 12, 24, 36 months later? So us as brokers, what every broker should be doing is they should be reviewing their loans regularly. We like to touch base at 6 months and 12 months and then every year thereafter. And what that involves is these reviews involve a review of your current interest rate. We reprice it with the existing lender. We ask them for additional discounts. We like to touch on where the property value is at that point in time. And then we renegotiate with that lender. If the lender is still giving them the best deal on the market, then we'll email the client a little bit of a report to explain where they're at and how they're performing against other lenders. And if they're still getting the best deal on the market. If they're not, we will then propose other options and say, hey, this is what others are offering. You want to stay or you want to move? Banks are not loyal to people. Like we know that, right? They just treat it as numbers. So I'll always tell my clients, don't be loyal to your bank, and don't even be loyal to your broker. Be loyal to what's best for you and your family, right? And if that means moving, changing banks or changing brokers, then you should do that, right? Not that I want you to leave us, but I'd like to think that we're doing the right thing and retaining you. But yeah, that's what we like to say, man. Every dollar we save you is a dollar in your pocket, not the bank's. And it's an extra dollar you get to put towards your family, your lifestyle, your kids. And the more the applicants are active in managing this and restructuring their lending regularly, the quicker they can pay off their loan faster and secure their long-term goals.
Okay. How often do you do that review? Like, is it a yearly thing or every couple of years? How do you determine that? Like, should I be, if I was to buy a property, if it's through a broker, like, when should I expect that call? Be like, hey, I just checked your file. Yeah, stay with the bank. Or I just checked your file. Hey, move it over here.
So look, by default, brokers should be reviewing it annually as a bare minimum. We should be looking at least once a year, right? But we don't do that. When you first settle on a property, we'll always touch base with you at 30 days. That's number one. That's to make sure that you've set up your direct debits, you're familiar with your repayment structure and where your repayments are coming out from, all right? We don't reprice after a month because it's just not realistic. But we always reprice at 6 months and then 12 months and then every year after that, thereafter.
6 months, is that a bit early? Like the first 6 months, is that a bit early?
It is.
Yeah.
In most cases, we can't get you a better deal at 6 months. But having said that, the possibility is still there. So if I can save somebody something at 6 months, it would be my absolute pleasure, right? So there are some instances where we can, and I'll give you an example. Banks tend to price based on LVR, your loan to value ratio. If you're borrowing 85% on your property, you're going to be paying more than someone who'd be pricing based on, say, 80%. A 20% deposit will always get you a better deal versus 15 or 10 or less. Now, if you've borrowed 85% of your property value and you've settled, 6 months down the track, you've paid down some of your loan and the value has increased, your ratio might have dropped to 80, right? How would you know if we haven't reviewed? So when we review at 6 months, if your ratio has dropped to 80% or below, we will be asking for a reprice as if it's at 80% and we could save you more. Banks will not tell you that. If your LVR drops and you don't call the bank for a review, it's swept under the rug, you'll forget.
Oh, that's why.
How busy are you these days? Who often checks their interest rate? Who's on top of their banking? No one's bothered.
No one.
That's what we're here to do, right?
I just wait for money to be taken out. That's it.
Well, how do you know you're not giving them too much?
It's always too much. It's always too much.
Well, it is. I agree with that. It is always too much. So engage a broker, get them to do it. And if they're not doing their job, get a second opinion. Talk to some others.
So I got another question.
Fire away. That's what we're here to do.
So I know, like, when you guys do loans and stuff, you guys get paid by the bank, right?
Correct. In most cases, yes.
Yes, in most cases, yes.
Yep.
So who do you act for? The borrower or the bank?
Okay.
Lender.
Well, that's a good question. So there was an amendment to the Broker Act some time ago. It's called the Best Interest Duty Act. They got introduced a few years back, where it stipulates that brokers are obligated to act in the best interest duty for the client, right? So in most cases, almost all cases, brokers are getting paid the same regardless of who they go, or should be getting paid the same regardless of who they go to. Most aggregators will cap their commission based on the net of offset or how much they're drawing down. So regardless of who we go to, we should be getting paid the same, right? There shouldn't be that conflict where brokers should be swayed to go to a certain lender because they're getting paid more. That's just wrong. You're not acting in the best interest duty of the client. Now, what I like to say to people is, we are here to sell you the best loan, get you the best deal, right? If we don't act in their best interests and they find out 6 months later that there's a better deal elsewhere, what's going to happen? They're going to refinance out and leave our book, right? So how a broker's paid, right? It's important that people understand this, and this is available in all loan contracts. They actually disclose it to everybody. We're paid an upfront commission for the settlement, okay? And we're then paid a small trail commission for the life of the loan based on the balance, right? It's like a residual that continues to roll in. So the original commission is there for originating the loan, the work involved, and the ongoing trail is there to manage the relationship. We are getting paid to manage the relationship. So if your broker settles and disappears and you hear nothing from them again, and they're still getting paid for your loan, what are they getting paid for?
Wow.
Right? That's why if a broker introduced client goes back to the bank and wants to restructure their lending, they're going to tell that client to go back to your broker because they're getting paid to do it, let them do the work.
Yeah, that makes sense. Yeah, I remember like some deals, some matters I was working on, and asked them to go speak to the bank. They tried, and then the bank told them to go speak to the broker. I was thinking, why? But now that makes sense.
Yeah, exactly right. And if we don't do the right thing by the client, they're going to leave our book. What's going to happen then? We're going to lose our trail. So it's not in the broker's interest to not service the client, nor is it in the client's best interest to have the broker not service their query. Our job, as per the Best Interest Duty Act, is to get the best possible deal for the client based on their personal circumstances, based on their long-term goals. And with every application, our aggregator requires us to enter in the objectives, the requirements. It requires us to compare 4 lenders and explain why we selected that lender, how it best suited their current, medium and long-term goals, and why we went with that lender.
Amazing.
Right? There are a whole bunch of variables, right? So again, it's not just about interest rate. It's about the turnaround times, the service levels,
everything.
The sort of everything, mate. Because banks don't just look at rates. We look at security. We look at your income structure. We look at so much, and that's what our job here is to do, right? Look, it's not an easy job. It's not just a matter of simply filling in a form and submitting. There's a lot involved. There's a lot involved, right? But we love what we do, mate. We love what we do. That feeling of getting people into their homes, especially the first home buyers or even the repeat investors, getting them start to finish, it's a great feeling. And I'd like to think, mate, that we're not just brokers, mate. I sometimes tell people that we're marriage counselors. Yeah, people call us up to just complain about their partners, right? We're friends. We would like to think that our clients are family. And we like to be with them start to finish, and that's how we get all our deals, mate. We build that relationship, we get referrals, we get invited to barbecues and events, and we get to sit with gentlemen like you. We love what we do. We love it. We love it.
Another question.
Fire away.
So it sounds like you've been doing this for a long time. And I like that analogy earlier that you gave, that you're like the punching bag, because you're like the glue, right?
Yeah.
Try and make things work.
Yeah.
Can you tell me some horror stories of dealing with particular lawyers? Without naming any names. Any particular, don't give me names of the lawyers, but what do they do? What do they do to make your life? What do we do to make your life hard?
All right, so look.
And what did you do back to them? That's important too.
Look, I mean, you get good and bad in every industry. Okay, I'm not going to sit here and say that all brokers are great. There's a real stigma attached to our industry, and a lot of people tend to think that these guys are just all dodgy sharks trying to get paid. We're not all like that. We're not all like that, right? Like the same as the stigma you get attached to real estate agents. A lot of them think that they're the same, and car dealers. We're not all in the same boat, right? And I'm sure lawyers tend to have that same stigma as well. So how do we work around that? It's a great question. Yes, we do occasionally hit roadblocks with accountants. We hit them with solicitors. We hit them with conveyancers. We hit them with real estate agents.
What do they do? What sort of roadblocks do they chuck at you?
They tend to shut the door. When you got a client, man, they've got a looming settlement and there's a lot of hurdles we need to overcome. We like to engage all the external stakeholders to meet the same mutual objective. Our mutual objective is always to get to settlement, right? So there are times where we reach out to lawyers to try and liaise with them and ask them if we can work around this condition or work around this settlement period and try to work with and tell them what we need to get it across. Banks can sometimes impose conditions on borrowers, and these conditions need to be
met.
Absolutely, and the legal representative needs to be aware of it. So there'll be times, and this is something that lawyers tend to do, we would sometimes draft up an email explaining all the issues that we have, and we outline all the pain points, and a lawyer will come back within an hour with just a quick one-liner. Okay. So it's, hi Solon, I hope you're well. We have 1, 2, 3, 4, and then Solon will come back with just a one-liner and just dismiss it, right? They tend to talk, lawyers tend to absolve themselves of the liability. They don't want the liability. They don't want to say the wrong thing in writing, right?
That's what we try to avoid all the time, of course.
Absolutely. So sometimes you might send them a whole essay, ask them to address a few points. They might come back with a one-liner and they won't address a single pain point.
That sounds like a great
lawyer.
lawyer.
They'll shut the door, right? We give them a call and ask them and talk all friendly, and they'll come back with a dry response. I guess that's just a personality thing, right? So we try to work around it. And if we have legal representatives that are not very cooperative, we'll just pass it on to the customer and get them to take it up with their lawyer. Likewise, we have this issue a lot with the legal representatives for lenders, because don't forget, lenders have their own lawyers as well.
Yes.
MSA National, Green Mortgage Lawyers, FMS, I'm sure you've dealt with them plenty of times. So we tend to hit a lot of roadblocks with them as well, where they offload a lot of the settlements to their juniors, who can be quite dismissive and just don't address the pain points, and then we're left in the firing line, right?
Which lawyers do you find worse, the lenders' lawyers?
By far.
Or the buyer's lawyers?
No, the lender's lawyers by far.
Oh.
By far. You'd know, mate. How many issues have you had?
I have an issue with every lawyer. No,
Yeah.
that's bad.
The client's lawyers, they tend to be business owners or employees of business owners of private companies. They tend to have a bit of a better service level.
Okay.
Mate, the bank's lawyers, mate, they treat you as just a number. And if you're not on top of them all the time, they tend to delay things until the last hour. And one of the biggest issues we have with the bank's lawyers is that they will always make the file ready to book on the day or the day before settlement. They will always upload the funds on the day of settlement.
Yes.
So how does a solicitor like yourself, who's acting for a client, calculate the funds required and give their client the instructions to transfer the funds in time? I'm sure that's a pain point, right?
It is.
So we have identified this issue a long time ago, and we've now set up a on our software and our CRM a trigger where 1 week out of settlement, we'll always touch base with the lender's lawyers to confirm, hey, have you uploaded the funds? Have you made the file ready to book? They might come back and say, no, we want to do it on the date. Okay, fine. But then how do we know what funds are available? If there's a refinancing lender available and we got to pay them out, how are we going to work that out? So we always draft up an email to the applicant and the borrower's legal rep a week out of settlement saying, hey, just so you know, we're a week out. This is roughly what your funds available are. This is roughly what you need to pay. Please liaise with your lawyer and start transferring your funds to your nominated settlement account or your lawyer's trust account, and always account for a little buffer.
Yes.
Add a little extra, right? Not a little, a lot sometimes.
Yeah, sometimes a lot.
A lot, right? You'll always get that back. If there's any extra funds not needed, it'll get rebated to you. So we like to be proactive with that.
Cheers.
I'm loving these questions. You're right on. You're right on. So a lot of pain points we experience.
I remember back in the day before PEXA, I have to call the bank very often to be like, hey, what's the net loan available for settlement? I remember that was the case. We had to call them. There's no other ways to find out. And then quite often they're just we don't have that figure. But then leading up towards settlement, usually a few days before, we'll get that figure. But now with PEXA, I find that they are a lot more slower. Just I think early this week, had a settlement on Monday or something like that. Yep. And I thought it was not settling. I thought it was one of the, I forgot if it was the incoming mortgagee or the outgoing mortgagee. They haven't accepted PEXA invite, haven't done anything, and literally on the day of settlement, they're like, done, all right, ready, let's go.
Yeah, but then how do you instruct your clients to transfer what they need?
Exactly.
Oh God, that drives us insane. See, look, with any broker introduced file, the buck should stop with the broker, right? If there is a refinance and a purchase involved, we need to make sure that the appropriate discharges are sent out. We need to make sure that the appropriate representatives are listed on the discharge form so that the banks will talk to you. If you're handling a settlement for a client and that settlement involves a refinance from another lender at the same time, and we submit a discharge form to that lender and your name is not on there, are they going to talk to you? They're probably not. And that's another thing with lawyers, mate. If it's not in writing, we're not going to talk to you. Sorry, we don't have authority.
Yeah. That's right.
I'm the broker on the file. I go and check. Of course, I've got authority. So, look, I always find that sometimes by emails, people can be a little bit apprehensive or defensive or concerned about putting things in writing. And I always like to say that you just got to be nice to the right people. Bees are always attracted to the honey. So offer honey and be sweet to people. If you're getting resistance, pick up the phone, give them a call, have a friendly chat and explain to them the pain points. 9 out of 10 times, mate, if you're dealing with somebody on a human level, they will work with you.
Okay.
Right? By emails, I know lawyers get a bit worried, mate, but you pick up the phone, give them a bell. Yeah, if you ask them how's it going, they might say good, but they won't tell you how are you. Just get to the point.
Send me an email with your questions.
No problem. Yeah, but look, sometimes just getting on the phone and just chasing up. Sometimes you got to do that. And that's another thing that we find really hard with our job. There's a lot of things that can go wrong that's out of our control. You just got to predict these problems before they happen. And that comes with experience, mate. Trial and error. Sometimes you can make a mistake that can cost someone. You just got to learn from this and move on.
I've got a question. Have you ever had a loan where loan was approved, everything was all good, and then a day before settlement, the loan gets
pulled?
Yeah.
Yeah, we have. I have seen that before. That happened a lot during COVID.
Oh,
during COVID, yeah. Especially
why did they do? Why did they do that? Like,
so we do a lot of self-employed loans, and a lot of industries were heavily impacted by COVID, especially retail and shop fronts. And as soon as COVID hit and we got to settlement, all of a sudden now the lenders were concerned that this person couldn't service the loan, and they want to come and pull the deal at the last hour, which was really bad. We had a lot of that. Now, it's very rare. It hasn't happened with us that much, but reasons that lenders could pull deals at the last hour, they need to have a bloody good reason to do it. They can't just change their mind. So if that ever happens, 99% of the time, the customer has done something really bad. So they might
have sent fraudulent documents,
undisclosed liabilities, a change in their situation, a significant credit critical change that they didn't disclose. So if the lenders pick up on something at the last hour, they'll pull the deal. The are notorious for that. So if you've ever had it before, I dare say it's probably the Why? Because they tend to do their QA checks at the last hour rather than before.
Do we need to beep that?
I think we might. I don't know. But yeah.
No. We'll beep it. So then be like, contact me to find out which bank.
Yeah.
Yes. Yeah. Beep that.
Go with that bank.
Yeah. There we go. Contact Mehdi to find out who it is.
Yeah.
Which bank?
Look, to minimize the risk of that happening, the broker needs to make sure that they do their due diligence. You need to really investigate the customer situation, collect as much documentation as you can, and explain to people why you're collecting that, right? When you're asking for things that the banks don't ask for, it's like, I need your statements, I need your tax returns. A lot of people will tell you why. Why do you need all this? Why the documentation? Hey, it's to ensure that we give you the right deal. It's to make sure that we miss nothing. The last thing we need is something to get overlooked and then have the deal fall over.
I'm just so glad I'm not a broker. Like that sounds so much harder than being a lawyer.
Oh, look, there's pros and cons, man. Like any industry, there's pros and cons.
Jeez, you have to play like detective. You gotta look like, you know.
We're sniffer dogs.
Yeah.
We sniff away and find, mate.
Yeah. That's good.
But yeah. Like I said, mate, it is what it is. We've learnt it. I'd like to think we're at a point now where we predict these problems beforehand, and yeah.
Another question.
Fire away.
To end it. What give me a few things that someone should look out for to determine whether they were the right broker.
Red flags.
Red flags. All right. Look for red flags.
Maybe
so,
give me like maybe 3 to 5 red flags and 3 to 5 green flags.
Okay, so.
Yeah.
Look, if there are a lot of backyard brokers who like to do deals under the table, who are not actually licensed, they do exist, right?
What do you mean not licensed?
Like there are brokers who were brokers a long time ago who are no longer up to scratch with their regulation. To be a broker, obviously you got to have your indemnity insurance, you got to be registered with the regulatory board, the MFAA, you got to have your own credit license or a credit representative of a aggregator.
Is that the 3 points, or is that still
one? There's many. So the first point I'd say is if you want to find the right broker, make sure that they are a registered broker. How would you know? They'll be issuing you a credit guide up front. So look for that credit guide. On that credit guide, it will outline their license, where they're registered. They've got to be registered with AFCA, the Financial Complaints Authority.
Is there a registry for them to search up the name?
Absolutely. So when they issue the credit guide on there, it'll show the numbers, their credit representative number, the company they trade from. You'll be able to see that. So number one, the first red flag is if they don't issue a credit guide. There's something going on there. That's number one.
Okay.
Number two, I'd like to think that most brokers have an online presence. You'll be able to look them up online and check their Google reviews. Not to say that some don't, and it doesn't necessarily mean they're bad. But if you got someone who's got an online presence, that's a bit of a positive. Thirdly, you want a broker who's got a place where you can visit, an office space. All right. Now, again, some brokers do operate mobile, so it doesn't mean if they don't have an office space, they're not credible. Right? There are plenty of work from home brokers, especially the stay-at-home mums, that are very credible, right? But if you had someone that issued a credit guide, has an online presence, has a website, has reviews, has an actual office space where you can physically go and visit them, that lowers your risk a lot.
Okay.
Right? If you're dealing with somebody that hasn't got any of that, you don't know who they are, they're meeting you at a cafe or a backyard, tread with caution. Doesn't mean they're dodgy. I don't want to throw them all under the bus. But these are the things you got to look out for. Look for them and look for online reviews. Check what others say about them.
Where would you find the reviews? Like Google reviews? Or
Google.
is there like a, you know how the agents, they have like a Rate My Agent page?
Yeah.
Is there something like that, like Rate My Broker? Is there?
There actually is. So there is, Rate My Agent has an arm for brokers, but not every broker is on there.
Okay.
I'll be looking for Google. Google's probably the most prominent one.
Okay.
They're the main red flags that I'd look for. Also, it's very important to deal with a broker who's prompt and available, right? If you're forced to call your broker 5-6 times before you get a call back, that's a red flag. Run. Because what's going to happen if you got bad news, if something goes wrong, they won't pick up their call. And that's the sad reality. A lot of people in the finance space tend to do that. You want somebody who's prompt, who's available, who gets the deal done, who's got the experience. So look for that. So summarize: credit guide, website, online presence, reviews.
Okay, so that's a red flag. Or is that the green flags?
Well, that's a green flag. I don't want to say red flag, it's a green flag, right?
Okay.
That's what I'd look for. Someone who just is prompt and available and is there. You can look up their credentials, you can do their checks.
Perfect. Thank you, Mehdi. Thanks for
Any
today.
other questions?
That's all.